Guess what market is outperforming stocks, treasuries, investment-grade corporate debt, even high yield? Munis. Yes, that's right. The municipal bond market that was supposed to blow up in a firestorm of defaults has delivered a total return of more than 5% this year. Even California, the worst-rated state in the union, has been a great investment. Its bonds are up more than 7%, according to B of A Merrill Lynch. With us to explain the twisted logic of the muni market is BlackRock's Peter Hayes. Peter is head of the firm's Municipal Bond Management Committee and oversees the $2.5 billion BlackRock National Municipal Fund, which has consistently ranked in the top quartile of muni bond funds. Peter, good morning to you. It is quite amazing. Money has been pouring out of the muni bond market in every week but one since November. Money has been coming out of muni bond mutual funds. But at the same time, munis have, as I just pointed out, been doing great. Why?
It is interesting, somewhat baffling, because if you look at taxable bond funds through that period, inflows were actually up. Excuse me. You look back to the fourth quarter of 2010, it was the worst performing asset class, completely the opposite of the picture you talked about at the beginning of the segment. Now it's the best performing asset class. So I think a lot of it had to do with negative headlines, investor fears, loss of investor confidence. And I think that's abated somewhat. So we are seeing some areas of the curve, some mutual funds actually have inflows. Longer end of the curve still seem to be negative. I think there's individual bonds also being bought by investors. SMAs have seen a lot of money in. But you're right, mutual fund flow is still down, still a little bit baffling. And the question is, where do we go from here, given the fact we've had this exceptional performance so far year to date? And I think it's going to be driven largely by what happens with supply. We've been down 50% year to date. Will that supply grow, and how will the market handle it?
So let's talk about some of those technical factors, if you will, for just one more moment, Peter. Supply has been down. There are fewer muni bonds being issued. Does that explain the market's outperformance in the face of the retail outflows, or is there institutional money coming in and replacing the retail investors and adding some demand?
Oh, absolutely. I think that the outflows of mutual funds have not helped, but the drop in supply has definitely helped performance. And you're right, a lot of that demand has gotten replaced by the institutional investor. It started in late January, I would say. That was the compelling value that was created by the sell-off late 2010. It was recognized by institutional investors. Those investors that don't actually need a tax exemption were big buyers of various asset classes, corporate-backed munis, tobacco bonds, healthcare, et cetera. And that's continued. A lot of that is because other fixed income asset classes had performed so well. So on a relative basis, munis looked very good. We are seeing to some degree that institutional buyer now pull back as munis have rallied in here, and we look closer to comparable fair value to other fixed income asset classes. But they're going to need to stick around in order for the market to continue to perform.
Peter, how do you explain California? The state has once again concocted revenue projections that really are in the realm of fantasy. How, under that scenario, does California remain an attractive investment? How did it deliver? How did it outperform up until this point this year?
Part of it, again, is lack of supply. California has not issued, California, the state that is, has not issued bonds so far this year. Typically, they're one of the biggest issuers in the muni market. A lot of that is around the budget process. A lot of it, I think, is just the fiscal austerity in the United States and the aversion to taking on debt. But California is an interesting story. It's one of the lowest rated states. Yet if you look at the size of the economy, its importance to the U.S. economy, how diverse that economy is, tech, tourism, Silicon Valley, one of the largest ports in the world, it clearly is, in our view, a good credit. I think it's outperformed because of the lack of supply. A lot of that budget problems that they've had is a result of political logjam. The political process there has been very, very difficult. That's what's made it hard to get the budget passed, and we're seeing that again this year.
All right, Peter, good to have you here to talk about munis in California in particular. What a bizarre situation it is, but doing well for muni investors thus far.